All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. We have market open here, almost an hour this morning, and a little bit of a gap up that has been, sold off since the gap, and we can see kind of how this played out. A little bit of strength as Asian session got underway, and then we saw some upheaval with the Hong Kong riots, and we saw futures dip back down, and then really kind of push back higher over the course of the European Open, and then really into the U.S. Open here today have really kind of fallen off. Now, this is a 1 minute chart. If we back this out to a 1 hour chart, you'll kind of see what this looks like. It's not a heck of a whole lot. We're still in this, we're still in this area of, what some will call resistance. A little bit of try to break out of that resistance here overnight, but nothing too, nothing too major there. We are seeing some of the more heavily shorted stocks, getting squeezed here just a little bit this morning. A little bit of extra strength in some of the banks. But nothing too earth-shattering out there across the board. So that's kind of the environment markets waking up to. Last day of a month. Last day of a month always an interesting day. And, when it comes on a Friday ahead of a 3-day weekend, you compound the interestingness of it. And when the market goes into really interesting days, right? Quadruple witching options expiration. There are times where you're going to expect one of two things on these interesting days. You're going to either expect a lot of fireworks and some big moves, or just paint dry. Watch them paint dry. It tends to be one of those extremes, and the way that we see the morning setting up, we could see a little bit of fireworks here, but again, we'll see kind of how the rest of the day starts to play on out. We are seeing oil fall off of some of its recent gains here. You can see a big strong drop here in oil over the last hour, but when it comes down to the hourly chart of oil, oil, just like the S&P over the last month, hasn't gone anywhere. Right, and both are very similar. It is interesting to see most of the energy components in the green, with oil trading lower here this morning, and you even see a Halliburton trading in the green, and with oil dropping. So not a lot of action that you would say, well, this is really super logical. It's a lot of action that's just based on some of the stuff we've seen over the course of this week, and we've seen some pretty hefty whipsaws and chains happen on a news front. Now, I updated the challenge spreadsheet here real quick just before I jumped on video. Nothing to change, nothing to alter. We're down a little bit on Microsoft, down slightly on Apple here. They both open just slightly higher, and they're just sitting slightly lower right now, and nothing really to change here with those. But I want to speak to a question that came in. Oh, and no new signals on the board. As it sits, I'll get the pop-up for the scan here in 2 minutes. If something changes, I'll jump on and we'll go trade it. But I wanted to hop on and address a question, a really good question that came in yesterday regarding the average true range. And if we take a look at Apple and Microsoft, there's something going on here, right? The average true range on Apple is 5. Now, what is the average true range? The average true range is how much the stock tends to move over a 14-day period. And it is one of those indicators where we see it kind of move up and down and all around, right? Back here, the average true range was up at 7. Down here, it was at 3. Right? And if you think about how that applies to the challenge and the stops used on the challenge, We have a very different stop level when the ATR is around 3 than we do when the ATR is up around 7. It's very different. That stop level, it affects it in a big way. And the profit level basically for Apple for the challenge was looking for a $10 run and stop level on a $5 sell off. And those aren't the highest we've ever seen from Apple, but they're pretty high, right? They're significantly higher than what we've seen over the course of the rest of the challenge, here of late. So, the question came in: how does that affect the challenge algorithm and the challenge trades when it comes down to it? And it's one of those things where putting everything together, we played with different ATR styles, methods. We went in, we did a lot of work with a 28-day ATR. To try to smooth it out, to kind of keep, some of the highs and lows a little bit more compressed. If you see here on the 28-day ATR, the highest ATR it's had is about 6.25, so it never got into that 7 range. But what we found, and what we decided to run with, and what we've been running with here for a while, is that the ATR does a really good job of helping us to capture a realistic gain for that stock over a given period of time based on market conditions. Because what's going to happen? Well, when market conditions, when they get more volatile, right, and the ATR rises, we tend to see bigger bounces. We tend to see bigger upticks. The upward trends tend to be stronger, right? So the last thing we want to do is have a really small ATR get stopped out just as the trend is get profit taken just as the trend is starting and go. But even more importantly, we don't want to get whipsawed out. And if we're using a really low ATR and the market's a little more volatile, the chance of getting whipsawed out is significantly higher, right? So, we decided to run with it and run with it on the 14-day, even though it has more change associated to it than something like a 28-day or a smoother time period. Because we want that inherent, volatility, that inherent move here, because it moves along with both option pricing and with expected movement in the stock. Now, there's a danger in it, right? And the danger is consolidation. Right? But that's the danger no matter, a long option trader who's buying calls and buying puts, the danger is always consolidation, no matter what. So, to say, well, we could take some of the consolidation danger out through the ATR, it doesn't make a heck of a lot of sense. And we don't try to take the consolidation risk out of it by using the ATR. We try to take it out by using the actual, trigger mechanism to say, hey, this is yes, this could consolidate, but the probability of consolidating is significantly less here. Okay, but anyway, so as it says with Apple, right? We're sitting here with a price target that's $10 above our entry price from yesterday. I mean, that's looking for a pretty sizable move. The question comes down to, is that realistic, right? Is that kind of move all that realistic given what has gone on? Well, when you look at past pullbacks, right, and if you come off of the lows, right, you can always see a big move. Here's Apple off its lows, 170 to 195 in a matter of a week, right? And the challenge isn't going to capture something like that. It's not designed to capture something like that, and there's not been a method that I have seen that does a great job of consistently capturing these types of moves, right? The same method you would use to capture this move right here, you'd end up being a buyer right here trying to hold through and you'd end up getting hammered, right? Same method you use to be a buyer right here and run this run is the same method you're using to be a buyer right here and run the down tick. So it's one of those where sounds great. But one of the tendencies that we see after a stock is consolidated or pulled on back, the tendency is for it to make bigger moves. And the longer it consolidates, the bigger the move tends to be, right? And we also tend to see that the bigger the pullback, the bigger the move tends to be. So in these consolidation periods, right, where it's consolidating, and then we get a signal, the ATR is pretty low. And that does leave us to, perhaps pulling things off a little bit too early. But we don't pull everything off. So we still have the potential to run with it, right? So we decided to keep, we'll keep the ATR since we still have that upside potential. But on these bigger ATR levels, on these bigger ATR stocks, we decided to stick with what the current ATRs are because the chance of a bigger move is significantly greater. Now, it works in two ways. It's like anything. It works, in our favor. It works a little bit against us. But, all the way the ATR method is set up, it's not a situation where the challenge would be put at significant risk of being materially altered if we change the ATR from going from 5 to, let's say we were to use 3 yesterday, which we could, right? We could use an ATR of 3. We have a profit target of $6. We have a stop of $3, and run with that. And that is something that we could do. But given the choice of option, we decided not to. Now, the argument that can be made, and the thing that one of the changes that I've looked at making to the challenge algorithm is come down to the ATR method. And what about the ATR method? Well, it comes down to these two steps, step 4 and 5, right? When the ATR is expanded, we tend to need a few more days to hold on to that trade, right? And so to go with a 4 to 5 day, period if the option's red, or to expand the period if the option is green, those start to make a little bit more sense in lower trigger periods, right? In higher trigger periods, not so much. But one of the things that I haven't made a decision on, I'm waiting to see all the data, is for next challenge simply expanding this to a 6-day on step 5. So if the option's green, giving it another day, to be able to hold, to be able to run with. And, it's one of those things where, depending on the market environment, that's going to be effective or not. The 4 day is way too short, 3 days way too short. We see a significant change in the data, but I don't think we're going to see a huge change in the data at the 6 day, but it is one of those where, I don't want to miss out on, some of the bigger upside. So that's one of the alterations we're looking to make. But looking at it in terms of ATR, right? If the ATR is a lot higher, do we need to expand the number of days? If the ATR is a lot lower, do we need to contract the number of days? And that's kind of the mentality or the idea behind it. What we're seeing is that, the ATR doesn't, in terms of shorter days, we don't need to shorten it. But on larger ATRs, do we need to expand the number of days? From what we're seeing, it's yes, but it's not overwhelming yet. It's not a overwhelming, well, this is a huge difference type of a thing, that we see with other things that we've implemented into the algorithm. Okay, so that's the ATR, kind of how it plays into the challenge and goes here. Naturally, higher ATR tends to have higher implied volatility on stocks, which means consolidation tends to lead to a little bit more of implied volatility erosion, which means what? Flat kills, right? Which, look, no matter what, flat kills. It is just the nature of the option trading beast, and regardless, it's not something that we're going to make a decision or alter something based on, hey, well, when it's flat, it does this. Our whole concept here is to, avoid the flat, avoid the chop, survive that chop, thrive when the trends happen, be in good positions if and when trends happen. And, I don't know, is Apple going to go on a big trend right here? It could. Right? It could. It could go flat. It could reverse lower. But what do I know? I know the odds are in my favor. I know it's not 100%. And, it's enough for me to go ahead and get in and say, all right, all aboard, let's run. And, we'll manage it as it goes. And it's nothing different from, any of the other trades that we have made, here for the challenge, from Procter & Gamble to Boeing to Bank of America to Disney to Under Armour. We've traded all of those with the same, methodology and same, exact same approach there. Okay. All right, so hopefully that answers the question when it comes down to the ATR and these expanded ATRs. Now, I did do something. I bought a shorter-term option, right? With expanded ATRs and a little bit of a shorter-term option, the risk factor is a little bit higher. Right? The risk factor is a little higher. The reward factor is also a little bit higher. So it's one of those where, this Apple, Microsoft is the risk reward ratcheted up a little bit. Yeah, it sure is, right? Not dramatically, but it's definitely more than like an Intel or the Bank of America or the last Microsoft trade or a Valero, on that risk reward front there. Okay. Alrighty. It looks like markets just kind of chilling out here. Let me pull up S&P futures. We're kind of just seeing a little bit of chill down here at this 29.32 level. Nothing that I would say is very conclusive for anything here just yet. Looks like Apple's up about 10 cents, Microsoft down 30 cents. So nothing even close to adjust there with those. And it looks like Baba's up a little bit, Facebook down a little bit. So both of them. I guess Baba's kind of outperforming a little bit, but they're probably all going to move in the same direction, as we go forward here. Thanks for hopping on. Have yourself a fantastic day. I'll be back on with you here this afternoon. I will talk to you then. Take care.